Hi traders, welcome back to the Price Action Volume Trader channel. If you're new here, please make sure to subscribe, hit the thumbs up, and check out the video description for tons of links to all the content here on my channel, plus information like my website, contact email if you got any questions or inquiries, and also the link for all my trading courses as well, where I teach strategies like the one we're going to cover here today and a lot more in greater detail. So today I want to talk about something that I use in Confluence in my trading, and that is the Fibonacci extensions when it comes to a trendline breakout or a breakdown. So this is a pretty simple thing that I use. As you can see right here on the right side, we have a Fibonacci extension. What do we mean by extension? Let me bring up the settings just so you can see how I have it set. Basically, when you set up a Fibonacci retracement, you would have a 0%, 100%, and then you're looking for retracements, to look for like entries on pullbacks, etc. When we're using extensions, what we're looking is beyond the 100% or the one anchor, and we're looking for Fibonacci numbers to the upside or the downside, where we can look to get information as far as possible, turning points or areas to take profit on our positions, etc. Fibonacci extensions are also very useful if you are trading on a market, for example, that is at an all-time high level. Let's say you get a market that just made an all-time high and you're trying to figure out where could be the next area to take profits. Well, you can then do a Fibonacci extension from that market, like we can do right here. You can run a Fibonacci extension like this, and then if this market comes back up here, then you can use the extension as confluence points for where to take profits, etc. Okay, but in this video, we're going to focus on how we can use the Fibonacci extensions in order to look for areas where price could be potentially reversing, or where we could be stopping, or at least having some areas where price could be getting stuck. Like I said, I don't solely manage trades based off of this, but I use it as confluence with other elements like volume profile, price action, etc. So the extensions, I have the 127.20, 161.80, which would be the golden ratio, but the one standard deviation up. Then we have 200, which would be pretty much a 2x extension, basically just the double the measurement that we had originally. And then we have 261.80, which would be a 2 deviations of the golden ratio. Normally, we don't really get up to 261.80 unless it's a very strong breakout or breakdown move, but I would say probably these areas would be the most important, and 161.80, the one extension of the golden ratio, is definitely probably the most important level that I track on this. So I'm just going to go over 6 examples on various markets and different time frames, and just show you how you can use these extensions. Now, one thing though, I know a lot of people are not big fans of trend lines. Some people believe that only horizontal support and resistance is truly valid and accurate. I don't really agree with that. I do think trend lines are a significant thing to track when it comes to technical analysis, But again, I use many confluence factors in my trading, but it is very useful to see. So for this exercise with this, what we're going to be looking for is markets that are in a downtrend or an uptrend, and then we're going to track when we have a breakdown or a breakout, and we're going to use the extensions to try to help us see where the move might be getting exhausted or where we could be looking for a potential reversal. So this is a chart of Forex. We got the GBPUSD, the pound dollar, on a 15-minute chart. And you can see right here, this market is coming down, and we got this trend line that has now had about 6 direct hits and is being respected. And then right on this spot right here, we have a clear breakout, we have a retest, and then the market starts going. So the steps we're going to follow when it comes to this is we're going to come and we're going to measure from the lowest point, in this case when it comes to a breakout. That's going to be our 0 anchor, and then the number 1 or 100% anchor is going to go directly on a vertical line above where the lowest point was. So we're going to line up the 100% with the trend line right on top of the lowest point, in this case that we had before the breakout. And as you can see, in this case we have 127.20, 161.80, and you can see how market came up. 127.20 didn't really offer any direct significant resistance here, but then you can see how we came up here, and 161.80 was a pretty precise level here where market came up, got exhausted, then we just came right back in. And these levels, even when we come back inside, they do become still, they have some significance. You can see right here how the 127.20 afterwards was a significant resistance as well. We had 167.80. We came down, bro market structure down, retraced again, and then we came down lower. Okay, so let's go into crude oil 1 hour chart. This is an example of a bullish breakout. So you can see how this market was coming in an uptrend. Then we started coming down, we formed a double bottom, and then we had a breakout from here right at this point. Okay, now on this example, we do have a double bottom, so I could either measure it from here or here. The thing I see with this one is I don't like to do these measurements if the low to the breakout point is not a very looks very short, then I generally don't tend to like to use those because the yield is going to be very low. You can see here, if I take this and I move it back here and I use this point from here up, measuring into the trend line directly above, you can see in this case we did go all the way past 261.80, but again, this is not a very large level, and we have these two levels that are almost identical. So in this case I measured it into this back level, and you can see if I go there, we had some choppiness right at 161.80, and then we had a very nice precise touch and reversal from the 200 extension. Again, I advise you to just go and back test, go into different charts, different time frames, and just test this out and see for yourself observations on how this works. This is an example of, measurement that was not as precise. This is in the S&P 500 on the 1 hour. And you can see we had a very clear trend line coming down here. We have our breakout right here. We actually had a very precise retest as well. And you can see how on the first breakout right here, I measured from the lowest point. This was pretty much identical lows here again. And I measured from there, straight line to the trend line. And that's where I anchor my 0 and the 100. And you can see 127.20, 161.80 gave some pullbacks and resistance. 200, not very much. We did not reach 260. Then we had this big pullback, but then if you can see on the second push up, if I extend this now to the right, you can see how the 261.80 was a very precise double top right here before we had a significant pullback on this level. Next, let's go into crypto, Ethereum, US dollar, 1 hour, well, let's go into the 4-hour chart so I don't have to squish the chart so much. And you can see right here, we had this move down, this trend line being respected, and then a very clear breakout. And the same thing, I take my Fibonacci from the lowest point, measured up on a straight line into the trend line that was broken. And then you can see we chopped around a lot, around 161.80. But then right here, 200, we had a very nice resistance area before we had a pullback. But you can see we did actually hold 127.20 very well on the pullbacks before we had a little push higher there. But again, these levels would have given you some opportunity, or if you were long here from this breakout, you could have looked to, close out part of your positions, or scale out or trail your stop losses into these levels right here. Let's go into Euro US dollar on the daily chart. You can see this works on longer time frames as well. We had this market coming on a clear downtrend. And if I zoom in, you can see trend line support. We had our breakdown. I do my measurement from the top of this swing straight down into the trend line. So I have my 0, my 100, and you can see how we came right into 161.80, and then we had a very strong reversal. We actually came back and make a double top right here, and then we came back down again, and we actually had another significant bounce from 161.80 before we broke down from here. And you can see once we broke down this 161.80 level, which was strong support, now became strong resistance from the other side, and we continued. And finally, an example on futures on the NASDAQ market, which is actually still playing out. This is a live market now, so this is an incomplete example, but I just wanted to show it how we have a very clear and precise trend line. We broke it and we're retesting it now. So we're at a very key level. So now if I was about to get long, or if I was long in this market, then I would start paying attention. Probably around 160, 180, or 200 would be areas where I would be looking at possible exhaustion or reversals. So this is how I would use this as confluence as far as setting targets, for swing trades, etc. Okay, so that's pretty much the video. Hope this has been useful. Again, this is a little confluence tool that I use to help me set targets and manage my trades. If you want to learn a lot more about concepts like this and more specific strategies and more detail on how I use different methodologies for Fibonacci extensions in my trading, make sure to check out my website and subscribe to the channel. I'll see you in the next one.